What is up, Elon holders? Welcome back to my channel. I'm back at you with an update on the Dogelon Mars token, and we know that is going to be the only token out there that does promote longevity and works with an organization just like the Methuselah Foundation to help make 90 the new 50 by 2030. If you are interested in this, if you are an Elon holder, you are associated with this, the links are going to be in the description to find out more about this project. I gotta let you know I'm not a financial advisor, merely helping explore the vast Dogelon Mars universe side by side, packaging it into nice, neat videos for your viewing pleasure. Definitely remember, drop a big like on this video. It does help every single Elon holder. It does help this channel, and I would definitely appreciate it. Also, do consider subscribing. Keep you up to date on cryptocurrency news, all things Dogelon Mars, and I even do NFT giveaways every single week right on this channel. You can win one of my NFTs. Go check it out. I do have a link in the description as well. Pick which one you want. You can drop some comments, and I do giveaways every single week right on this channel. So yeah, stay tuned for that. And let's get into the video. We are currently ranked 134 right now, looking nice as we have raised one rank right now. So very, very cool to see. Price tag is looking like 60319 right now. Market cap looking about 3% down on the day, but still at a healthy $176.5 million. Not bad at all. Looking at our holder count, we do continue to increase. This is great to see. It looks like 138,322 holders. Very awesome to see, in my opinion. If we look at the technicals, looks like 22% of people in the money. So hey, not bad right now. We've been sitting at the 17-18% for a long while, and it's good to see us hold above the 20%, at least for right now. I know that number will change in the near future. Now let's get on over to the technical analysis I have, and it's still issuing a strong buy on this project. I will refresh that so you do know that that is most up to date and accurate. That is going to be a strong buy on both, on all three. It looks like very, very nice to see. Going on over to Investor Observer, it does look like we do get a 44 on the short term, but long term is looking a little bit better. It looks like 68 on the long term. Very, very nice to see. 47 in terms of volatility, risk gauge, and sentiment sitting right about in the middle. So which way we're going to go with the project right now, I honestly, I'm hoping that we can just see some nice upward movement. It does look like 5.65 have been traded over the last 5.65 million have been traded over the last 24 hours, and 47.16 million traded over the last week. So do we have any good news for Dogelon Mars? Let's find out, shall we? Looks like, is Dogelon Mars Elon trending lower or higher Wednesday? It looks like Dogelon Mars receives an average long-term score of 54 from Investor Observer's analysis. Our proprietary scoring system considers the trading pattern over the past several months to year by analyzing the token's consistency, volatility, and where it is relative to long-term averages to determine whether it's a strong buy and hold investment opportunity. Currently, Elon holds a superior long-term technical analysis score than 54% of cryptocurrencies. And we do know that that's even higher now. So now that is actually 68% of cryptocurrencies. Long-term investors employing a buy and hold strategy will find the long-term rank especially relevant when allocating their assets, and may find additional value finding cryptos with a high short-term technical score to discover tokens that have bottomed out. And that is why I bring this score to the channel, because it usually is a good indicator. It is not 100% accurate. Do not get me wrong there. It is just merely a good indicator to get some kind of an idea, and definitely not to be taken literally, as it does change. It changes pretty frequently through the day. You notice it was a 54 and now it is a 68. So very, very nice to see. Very nice to see. We do know that we are at an 11 right now on the Fear and Greed Index, and we have some major news that has tanked the crypto markets today. We do know that we have had looming recession news over our heads, but we did get at least a glimmer of hope this morning with some positive news, but that wasn't what crashed the market, but we did get some new news that actually crashed the entire crypto market. So I'm going to bring that in to this channel for you guys. It looks like a new report revealed major source of recent crypto crash, crypto market chaos. Looks like, and so a new report from blockchain analytics company Nansen offers some insight into how major crypto trading firms, including Celsius Network and 3 Arrows Capital, became overexposed earlier this month. A lot of selling pressure stemmed from the Terra collapse. Nicholas Polk, a Nansen research analyst and report author, told to Yahoo Finance many of these large companies were way riskier players than expected. It suggests that if big players are all in the same position, it is not necessarily a good sign. Drawing a link to the more than $50 billion market collapse of Terra Luna's token algorithmic stablecoin UST at the beginning of May. The report shows large crypto players sought their next profit strategy by adding leverage to a high interest yielding derivative of the second largest cryptocurrency, ETH. So it does look like they were leveraged against ETH and are now facing some liquidations. The derivative in question is staked Ether, or STETH, which allowed investors to lock their Ether on the Ethereum blockchain ahead of the merge, or the blockchain's transition to proof of work from proof of stake. From late April to mid-May, the price of Ether had fallen by 35%. On May 11th, 98% of more than 600,000 of Ether-like assets were moved from Terra and converted into STETH. Amid this panic, on May 12th, 3 Arrows Capital and Celsius yanked a combined $800 million worth of the STETH from the DeFi exchange curve. In a thinly traded environment, the moves contributed to a change in sentiment from STETH, according to the report, but neither firm exited from their STETH position. From May 12 to June 18th, investors sold $4 billion worth of STETH holdings from Ether amid deteriorating market conditions that saw ETH itself fall 31% in a week. Ouch. And I was definitely affected by that one as well. These outflows pushed the price of STETH as much as 8% below its price, according to CoinMarketCap. The report notes that while STETH does not need to trade on a one-to-one basis with ETH for most of its history, staked ETH has generally been at par with ETH. As the spread between STETH and ETH widened, then large investors who borrowed against their STETH holdings on DeFi platforms like Aave began receiving margin calls to add more collateral. Between June 8th and 9th, Celsius withdrew 50,000 staked ETH tokens in collateral as it used other crypto assets such as stablecoins to either add collateral or repay debt. The report states that the staked ETH ultimately in FTX deposit, presumably signaling an OTC deal over the counter. Shortly after Celsius froze its customer accounts, the company remains a top lender and the borrower for Ether in DeFi marketplace, holding a combined collateral value of $1 billion in ETH and other crypto derivatives on DeFi platforms, including Aave and Compound. We cannot see their other positions or how much debt Celsius has, but for now we don't see any STETH positions at risk, said Polk, adding that the firm will need to post more collateral on its position if the price of STETH has a drawdown of more than 30%. Silent for more than 2 weeks, the crypto lender Celsius, which according to the website held $12 billion in customer assets as of late April, has hired teams of lawyers as well as advisors with Citigroup, fueling customer fears the firm will soon go bankrupt. Meanwhile, crypto hedge fund 3 Arrows Capital also stayed quiet, with Reuters reporting Wednesday that the firm has entered liquidation. Though Nansen's report suggests 3 Arrows wasn't heavily involved in STETH until after Terra's collapse, the firm took a total loss of 6,500 ETH, around $7.2 million at the current market price. Given the depreciation of STETH, in addition to Ether's total loss of 50% for the period. During the event on June 7th, the firm has borrowed 29,054 staked ETH from crypto lender BlockFi and offering a spokesperson for BlockFi told Yahoo Finance isn't typical. 3 arrows used at least a third of the sum as collateral on Aave or Aave. I don't know how that is pronounced. Some of these people were super smart, but they either held out too long or kept buying more into a position they knew full well would be very hard to get out of in a worst case scenario, Polk added. And that is the bottom line of it. I mean, these big hedge fund players are getting margin called and getting liquidated ultimately. Unfortunately, that is very horrible to see, but that is what is doing it. That is what is sending us in the free fall across the crypto market. And a lot of people are going to use this as a buying opportunity, and I definitely know I will be doing that. That is what I will be doing personally. It's a good time to shop into some of your favorite projects and dollar cost average your way into a better position. Now, I know I made this video late. I do apologize, but I definitely wanted to keep you guys updated. Thank you guys very much for tuning in. I appreciate every single one of you. If you watched all the way to the end, I appreciate you the most, and I will catch you in the next one.